The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. And, well, we've got the Fed announcement out, and the markets started fading early before the announcement. We're now off at least 12 points on the S&P cash, although it's kind of bouncing around here fairly quick, and a little over 2 billion shares. Certainly looks to me like we had a lot of people believing the Goldilocks scenario of a continued IV drip of morphine for the market with a monkey on its back, wanting free money forever, ad nauseum. And I'm a little disappointed that they didn't get what they wanted, which was, of course, a lot of happy talk. Pretty balanced statement. Probably the big change was in the utilization of labor. They're basically saying the labor market's pretty good, and I suspect that the change in that language brought two of the dissenters over. I think we had one dissenter on this, and I think just changing the language there was probably the reason for the last 8 points down on the S&P here. But we'll see. It's not uncommon to see this kind of dance around a little bit, and then everybody digest it. Of course, the shills of Wall Street will say that, that just shows you how good the economy is. We don't need it anymore, so the market's only going to go up. And my guess is that everybody knows what's happening and what's going to happen. That about 30% of the earnings right now for the S&P 500 comes from artificially low interest rates. That right now the Fed funds are telecasting that we will have higher interest rates by early summer, if not by midsummer. The stock market pretty much always watches 6 to 9 months ahead, and we are certainly in that window. And the action in the markets over the last few days, pretty good indication that they were able to. This is a problem. The market always tries to shake you. Being short is probably one of the hardest things to be in a market, because you're going to be right a little less, a whole lot less, a lot of times, than if you are long. The difference is you're going to make so much money in a short period of time that when you're right, that it overwhelms the times that generally you are wrong. But just like Babe Ruth, who was a home run hitter, he was also the number one strikeout king of all time. But making the kind of cash that few people made in 1915 or 1910 before everything else came along, I think that's about the right time frame for when he was extremely popular. But he was making $120,000, $130,000 a year, which is kind of like the equivalent of making about $50 million a year as a baseball player today. Pretty rarefied air. Anyway, going to get a little bounce out of here in 1977. But like I said, it's going to be probably toward the close before we see how people truly vote with their feet instead of the talking blathermouths that are now everywhere, including me. On this day in 1969, the ancestor of the Internet is born. The first communication between computers at separate sites occurs over the ARPANET when Charlie Klein, working at UCLA, logs into the computer system at SRI, Stanford Research, at 10:30 p.m. at night. And guess what? There was no Al Gore there. Al Gore was still dreaming up a wonderful hoax to make $300 million selling carbon tax credits while he was inventing the Internet at the same time. Of course, he was nowhere close to this and wasn't inventing the internet or having anything to do with it, and just happened to tag on to a bill that helped fund it in the 80s, but that was about his length. Now, of course, he runs around pushing his global fraud. But I digress. This is the first day. It really grew through the next 10 years. And, of course, it wasn't until a lot of people started thinking about the World Wide Web in the late 80s that this was actually something. And I remember getting on the internet and the World Wide Web. Back then, the only way for me to do it was via CompuServe. So you could log back in there and log into all the college computers across the nation. It was really neat at the time. I didn't really see the application of the World Wide Web being able to publish anything, but certainly did come along. Anyway, on this day in 1969, the internet is born, sans Gore. I've been talking, what was it? I'll have to go look it up maybe during the break. I put out a alert in my Tech Insider that said the 3D printer market had hit a high, and I think I was within a day or two of that happening, at least a few days. All I remember was that 3D Systems had hit like $96 or something, and I said, this is it, stay away. And I still get people emailing me every week about, is it time to buy 3D printers? I've said for a long time, probably since early spring, that you wanted to wait until HP came out with their 3D printer. They had a lot of technology with printing things extremely fast. And what we saw out here today is the reason that 3D stocks are getting absolutely hammered. And we'll look at them in just a second. What HP has shown is basically a way of using their print technology where they print a lot of dots all at once instead of one dot at a time, which is the way that almost all these 3D printers work now. At a minimum, this thing's going to be about 10 times faster in printing, and they think that there is the ability to maybe even get that up in future versions to 100 times faster. If you think of about the way an inkjet printer prints, it has a print head, and that print head's about an 1/8 of an inch by maybe 1/4 of an inch, a little rectangular area, but can print extremely small areas. And of course, if you've got a color version of that, it's got a print head with 4 different areas for the 4 major color food groups, CYMK, for all those folks that know desktop printing. Anyway, the whole idea of using this kind of technology and the super fast motors that they have for moving printers has put 3D printers into a tailspin today. And that's not the only thing HP showed. They have another thing called Sprout, and we'll probably talk about that on Friday's Tech Insider a little bit. You're actually going to be able to see the Sprout stuff, I think, this weekend at Best Buy across the country. I don't know if it's going to be in all of them or some of them. Details are a little sketchy. They started showing this stuff about 11 a.m. this morning. They're going to be over CNBC this evening, and I don't think there's going to be a chance that any of these stocks recover in the next day or so, so don't get too excited. I think that there is a reason for a lot of these stocks to be out here, and if you look at the HP thing, it's certainly not something that's going to sell for $1,000. This is targeted at Kinko's, that kind of places where you go in and hand them something and they hand you a thing out of its 3D printer in a few minutes. It will be able to use different kinds of plastic and different kinds of colors, and you'll just be able to walk in there and hand it to them, and they'll print it to you. You hand them $20, and you'll have your whatever it is come out the other side. To this point, it's been 3D printing has been very much, except at the high end, extremely high end. I'm talking about $1.5 million. kind of a hobby, much like when I played with computers until they actually started doing something useful. And that was probably about 1985. Up until that point, you could use it as a word processor, I guess, maybe a little earlier than that. And a legend amount of MBAs coming out of college around 1981 buying their Apple IIs to run their spreadsheets on. So there was the beginning of it. We're still looking for that killer app for 3D printers. But a lot of people like it, just being able to make their own stuff. Certainly what HP is going after is high use, high capability out of this thing. And it's probably, 3.5 feet by 8 feet. This thing is giant, so it's not going to be cheap. But rumors is about $100,000, but that's probably just about perfect for somebody like a Kinko's. And being able to be 10 times or faster means that they actually be able to crank out some jobs on this thing. And I think it will change the way that most of these other companies actually do it. When we last looked, I think at the top of the hour, we had X1 off 7%, 3D Systems off almost 6, SSYS almost off 3, VoxelJet off 6, and Proto Labs it's just barely off. But I think they're printing me a 3D kidney right now. Probably why they're up there right now. Anyway, printing off here at 1970 on the S&P cash, 2.2 billion shares. Again, light volume all the way up through here. We saw them run a lot of stops yesterday in the marketplace, including a couple of my own. I stayed probably about, 70% short. And certainly the market is coming back to me now. I'll have to see. I've got some after earnings plays tonight, and I think they look good for me. Anyway, we'll have to see how this works out a little bit more. Of course, today would be incomplete if I didn't beat on some of these morons that I've seen on financial infotainment. Some of these guys, I'm going to call them pencil neck jackasses. Just because that's what Hank Hill would have called them. What a great guy Hank Hill was. Strangle these little weasels out here. But anyways, of course, these guys that haven't seen sun in 100 years and 25 and already bald and everything else, that boy ain't right. Anyway, got a bunch of these pencil neck guys out here. And, of course, they were lambasting anybody that didn't bow to the one true God, and that it was Apple. 13 have to ignore them and bow to the one true God, Apple. Apple's a fine company, but unfortunately they do very poorly based on these Apple fan tickets. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we watch the market, 1975 on the S&P cash, volume picking up a little bit, 2.3 billion shares. Everybody's still wondering what the Fed means. And, of course, I'm waiting for the normal shills to come out. There have already been several shills out here today. One of the ways you can tell a flat outlier or a fool in the market is if they talk about the total addressable market, and they'll call it TAM, T-A-M. So if you see the next guy that says TAM on CNBC or Bloomberg or anywhere, you have my permission to take a shovel and just hit them as hard as they can. These are the same jackasses that are either stupid or liars that were around in 2000 talking about clicks and eyeballs and everything else other than money. What we've seen in Facebook last night, what we've seen in Amazon already, is one thing only. Show me the money! That's it. This market has changed. Everybody's becoming Missourians. It's show me. It is not, it is not, we trust you, and we're hoping one day that everything will work out. It is, if you're going to spend more money, I want to see more cash coming out. And I want to see proof that you're making money. Amazon has had probably one of these Cinderella lives of never having to make money on the giant lie that it could make money anytime they wanted to. And maybe they could have for a few quarters. My theory has always been there's no way that this company can make money, because as soon as it makes money, people are going to start putting a PE on it, and that PE is going to be astronomical. And, you know, now you can just say they're growing, they're growing, they're growing. But I have a feeling when the market turns, especially on something like Facebook, it is telling you something. We've seen it turn on Amazon. Facebook, even though it's making money, has to start spending money. And the market, Mr. Market, don't like that at all. You got some splaining to do, Lucy. Of course, if you missed this little tidbit and you weren't happy before, you're going to be less happy. Hedge funds and other rapid-fire investors, high-frequency traders, have been using a service that the Securities and Exchange Commission was farming out to a third party to do their website and actually send the data out. Of course, the SEC just turned their back, and of course, this third-party company was more than willing to sell faster access to high-frequency traders. And I want to thank once again our friends at Nanex. This is not Nadex. Those are our friends too, but different friends at Nanex, and the people have been showing over the last few months just how much faster the high-frequency traders have been getting the news compared to us. And it's been anywhere from 2 to 5 seconds. Not a huge amount of time, but you would think if there was one government sector that would know how important it was to make sure that data comes out to everybody at the same time, it would be the SEC. Not participating in it. Not probably doing anything about it. Of course, our good friend over there at Nanex that was on the show several years ago when we went through the flash crash, and of course government people hid from the truth, has uncovered this once again, and it is neat that he can continue to dig up and show the dirt on the hands of not only rascals, thieves, and spineless weasels in the trading sector, but those that are supposed to watch them like the SEC. My guess is that this will not go away quietly, and we're going to see some heads roll at the SEC as someone has to explain why they were part of giving the high-frequency traders and anybody willing to pay up faster access to their data than someone else. Satanic Exchange Commission. Someone said that in the den. But anyway, Mr. Hunsader, who has a great blog on Twitter, if you just do Nanex, N-A-N-E-X, and Twitter, you'll see that pop up pretty quick in Google, and you can read what he did. But he's, of course, Eric, a little upset that the guy that came in and ratted out the biggest fraudster of all time, and the guy that did nothing with that data, is the same guy that they gave this case to pursue. So is this the guy that they give cases to go and die and ignore? Probably, certainly, he is a hatchet man to make sure that none of this stuff comes up. If they can kick it down the road a little ways. So I'm not encouraged anything's going to happen in the next few days. But right before election, that's not the kind of stuff that you want coming out. We'll be back and start looking at charts in just a few minutes. 1977 on the S&P cash.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And got the S&P bouncing around 1976 and change. Volume a little bit up, 2.37 billion shares now. Again, it's probably going to be the last 30 minutes where we see the deciding factor out here. I'm showing on my screen right now the Twitter feed for Nanex LLC. And if you want to check that out, pretty easy to just put in Nanex and Eric Hunsater and or Twitter, and you'll find it pop up from that. And pretty good feed, but of course he's a guy that sells high-frequency data, but he just doesn't sell the data. He sells everything that happened, every bid that went in and left the market, so he can go back and forensically find anything. He is quickly becoming the biggest pain to the backside to the thieves and cheats in the market, who think that no one will ever spot it. This guy's probably number one with being able to hunt down data and find out, and now has pointed out 3 or 4 times just how these guys are skinning us alive. And kudos to Eric Hunsater, a market, what would you call it? Market angel. He's just angelic. Anyway, that's pretty much it. If you watched last night, you saw a satellite launch blow up. I've always said that the best of Elon Musk's 3 businesses was SpaceX. I suspect that either you're going to see Tesla bought out in the next couple of years far lower than it is now, or maybe go back down to $20 or $30 where it's fairly valued. Same thing with his solar cell business, also probably vastly over it. His SpaceX business, probably the best business. And I'm going to have to give him kudos. Mostly he's kind of nutty and kind of a giant blowhard when it comes to technology. But, if you need to cover something, I can see how CNBC that needs to put on 9 hours a day worth of a broadcast would love to talk about 10 minutes about some kind of nutty thing he said. But SpaceX actually pretty interesting idea. And he predicted it fairly rightly, and that is that the company that did that, basically their business plan was to buy old Russian engines that were made in the 60s that were never used for their ICBMs. And not going to be very surprised if a lot of these engines just blow up. Not a lot of X-raying and everything else going on back then. And they basically were the low bidder, but of course they've got these engines that literally were built in the 60s and early 70s for ICBMs that were not used, or that were taken off ICBMs that were, and been mothballed. So who knows what's happened to these things forever. But ORB is off 15% on it. I still think Tesla's Musk's best business is probably SpaceX, and not the flaky idea that eventually prices on solar cells will dip low enough, and or that people will be buying $90,000 Teslas forever. Once he gets into less expensive cars and builds a $5 billion plant, suddenly the margins on this are going to probably look as bad as the margins look in the 3D printer space. I'm expecting Tesla to go back down to $40 unless somebody does something extremely stupid, which you can, in the financial market, never say never. Time Warner could come along and buy AOL. Oh, they did that, didn't they? Huh. Well, something that is stupid could happen with this. I don't think it is likely to buy a company based on one car and battery technology. And again, I think that there's probably better plays out here than Tesla. Again, do you want to be in the business of digging gold, or do you want to be in the business of selling those people the spades and the shovels and the jeans? Not too many people remember the people that were digging gold. A lot of people remember Levi Strauss, though, and the jeans that are wearing it today. So it is Commodore 63. Yes, the rocket engines were refurbished. Yes, repossessed. For sale at almost no price. Pretty hysterical. Anyway, wanted to get on. Apple looks to me like it may have made a high out here that would be extremely dubious. I'm suspecting why this will not happen overnight. I'm suspecting that we probably over the next week or two will see this thing close back under 101.70. I think this has been a false breakout for Apple to the high side. We're probably looking at a lower trading range. I'm thinking that we could see this as low as $88 come Christmas, if I'm right on the general market. And I'm looking for this thing down in the $70 range after Christmas, when everybody figures out what Samsung has been telling us for 6 months, and that is the high end of this market is saturated. As soon as the people all buy everything that they have now, who is Apple going to sell to next? Now, according to them, it's the Chinese. According to the Chinese, not so fast. We've got Xiaomi and a couple of our own companies, and guess what? We're going to make it incredibly difficult for you to come in and sell your smarty pants phones to our folks. We don't even have 4G here, and you're going to try to be pushing this big expensive phone on people. Besides, we'd rather have all the source code that we have with Google's Android system, so we can put on our own checks and balances and watch our own people like Big Brother. They thought that Big Brother was an instruction manual on how to govern the people below them. But anyway, Apple, you got to watch this very closely over the next day. It looked to me from the intraday trading out here that we could have a big move in Apple. This could be the top. Again, this thing's got a while to come back. But the next close under 101.70 would be a huge signal saying that you're back into the lower trading range, and that lower trading range could take you to about 77.50, which would be the center part of the gap up from April 24th of this year, and I think that gap is directly open. We have a smaller version of a three-gap play already in this, and what I suspect is that on a failure here, we can fill all three of these gaps back down to 97, which isn't a big deal. I think it would briefly come back down to there, but certainly a major failure here on this and some other stocks would probably whip this thing down fairly quickly. And you might say, well, everybody will hold Apple up no matter what. But if everything else in the market starts getting sold, it's going to be incredibly difficult, since everybody owns Apple, to not sell a fund and have some Apple sold. My guess is watch this extremely closely. And again, 101.70, it closed below that. My guess is that we're going to see full tilt boogie to the downside over the next 6 months to a year. And I can see us getting back to that $400 level pre-split without any problem, especially since the watch is probably not going to come on, and the problems that they're having with Apple Pay and some of this other stuff. And two, I've never gone wrong shorting a company that was run by a CFO in technology. They've never failed to disappoint. And I suspect that especially some of the stupid stuff that the current CEO has been doing, like going down and getting involved in local politics, telling them that they would close their shop and leave Arizona if people didn't vote the way that he wanted for his bill on gay rights, and then to decimate that plant and run them out of business and force them into bankruptcy. Just one of a long list of stuff that this guy has done, and pretty much every CEO I've ever seen in a technology company, the best they can do is tread water, it seems like. And I think we have a lot of people wanting to cash out at the highs, like Icon, and I think they've been very good at getting these people to buy all the shares back. But as we've seen in IBM, there will be a day when the music stops, and my guess is that that is in the coming 6 to 9 months. We're going to see the huge pullback in Apple once everybody figures out that the smartphone business is saturated at the high end. Have I talked to Andy this week? No, I have not. He's on vacation, and I thought maybe his call on gold was pretty good. Just probably needed to pop up a little bit. Like I said, right now I don't think the big money is in being short gold. I would rather this thing flatten out and buy gold at $1,100 than play at it. I think there are much better plays in other areas at the moment. And, he's going to play it, I think, short, but I think it's interesting. Anyway, as we look at here, 1978 on the S&P cash, so we're off 6.5 points on the S&P cash, 2.5 billion shares. As we look at it, wanted to look at a few other stocks as we had time today, and WuXi Pharma Tech, WX is a symbol on that. I've been watching this one back up to its previous high. That is on the September 3rd high at $37.50. 750,000 shares going in yesterday. We had 237,000 shares, 213,000 shares today. So we are bucking up against a previous high. Let's get the profile on these guys just to make sure. I'm pretty sure I know what they do, but operates a pharmaceutical, biotechnology, and medical device research and development outsourcing company in China. I don't think you can go bad probably betting on some fraud in some of these companies either. Don't know anything specific, but my guess is the books on all these Chinese companies are going to be mildly roasted to absolutely thoroughly carbon blacked by the time we get out of this market. Cirrus One, C-O-N-E is the symbol on this guy. Watched it try to come up, and it was a dime short getting into the September highs at $26.88. 320,000 shares, a little lighter volume out here. Yesterday, 190,000 shares, pretty big reversal out here. Pretty much showing that we're going to come back to the 23.59. After the bell, no, not after the bell. After this, Tableau software, I've been watching this one too. It broke out from the previous high on September 12th, $78.42, 3.3 million shares. Yesterday, half that, 1.5 million shares. Today, pulling back and looking for a lot of these companies that are in upper trading ranges to have created a false breakout. DeVry, one of the few companies out here that's still in for-pay education, or for-profit education, I guess would be a better way of looking at it. This thing had a pretty big spike on volume April 25th at $47.73, 3.2 million shares. And we saw yesterday 500,000 shares, today 330,000 shares. But it looks like it's ready to tuck back into this trading range. So maybe all these stocks hold these trading ranges into Christmas. But certainly it looks like we've got a lot of false breakouts in this market. The Dow Jones Home Construction Index Fund, the ITB out here going up against its September 17th high at $24.31, a maximum volume of 10 million shares into that. Yesterday we had 5.3 million shares. Today reversal 2.8 million shares already. Looks like you could come back down to the previous low on October 13th at $21.22. Some other ones of interest out here, as I'm seeing a lot of these stocks give a kind of a tepid approval to higher prices. Palo Alto Networks, a darling of the IPO market in the last year, was testing its high out here of October 3rd at 106.79, went to 108.50. 2.4 million shares, and plopped back underneath it the next day on the 27th. Yesterday, tried to pop back up, lighter volume, 1.8 million shares. Today, looks like it's really getting into the scheme of things with a little bit of pullback. Not a lot of energy in this last move back up to the high, false breakout, back into the trading range, which would take you back down to $87.83 to the low. And the volume was pretty good down there, too. So, good company, but a lot of these probably trapped in higher trading ranges. Where do I see Facebook going? I don't know. I'm probably going to have to get a few more days looking at this. Right now, I suspect that everybody on Wall Street is gearing up to upgrade Facebook and telling everybody what they heard and what they saw yesterday in earnings wasn't what they saw and what they heard. I'm looking for 20 upgrades, and my guess is that as soon as this thing pops, everybody and their dog's going to be all over it to start selling it. So I'd probably like to see this gap about half filled and then wait to see that everybody's coming in. But certainly, probably coming back down to at least $71. Doesn't matter how many people use it if it doesn't make money. We will be back in a minute. Give me a call, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got gold off $16. Looks to me like we've broken that 1225 support area. Would take you to 1180 on gold. On the S&P, a close below 1968 would signal a false breakout to the upside in the Fibonacci trading range. So it happens. The market goes a little bit too far down, goes a little too far up. But I am remaining short. In fact, I was buying, actively buying this morning, January calls on reverse ETFs, especially in the NASDAQ area. So I'm buying some long-term stuff that basically means that I'd lose maybe $1 at the worst on these. And so I was buying some big projection, and it was incredibly cheap as far as I could tell. So we added that to the Tech Insider today. So we're getting a little bit of action out here. But super high reward and risk not all that bad. Anyway, we're off 10 points, 2.56 billion shares. But I'm willing to go into January right now, thinking that we're going to have a long, slow slide possible. And right now, probably the best way to play that is with options. As long as we see these cheap options with the VIX as low as it is, 15s, you got to start. I'd really like it under 14, but I don't think we're going to get that again anytime soon. So we're going to have to watch it. Anyway, a couple things, again, that we talked about, and that are going to be some areas that we want to watch on reversals on Apple. Like I said, the first key to Apple would be seeing a closed negative today on Apple. That would be the first door closed on that one. The next low at 101.70 and closed below that. And we have some other ones on the S&P. Look for a close below 1968. To me, that would be a pretty good indication that this was a false breakout and a good way to squeeze people at the highs. I got a little squozen, but I'm no worse for wear. I will pile back in on a confirmation below 1968. We've got some action going on for aftermarket in my daily newsletter, and I really like the action in that so far. But we shall watch. A lot of this stuff is really warming up for some huge moves, and my guess is we're going to continue seeing 3 out of 4 stocks do a Facebook or do a Gilead or do a Panera Bread or all the other stocks out here. Wanted to see how Royal Caribbean was doing. After the Ebola scare, they're trying to push this thing back up. Volume actually not as bad as you would think, but certainly they had the big volume back down to $60.20. So it kind of makes me think that a lot of people think that that's still going to be a good thing for this winter. I thought it was a little interesting. Reinsurance Group of America, RGA. This one's coming back up into supply line. You can see that it hit it with a lighter volume, about 400,000 shares yesterday, and basically coming into 700,000 shares. So a lot of these stocks coming up had a lot of volume, and not uncommon after a huge move down to catch a lot of shorts, especially shorts blowing this up. But what you don't want to see is exactly this, and there's so many of them in the market, and that is these high volume lows on this one, October 16th at 72.34 at 1.5 million shares. That's going to get tested, folks. Keep an eye out. Remember to sell when you can, not when you have to. Probably a good day to be selling. Also, catch me tomorrow. Same bat channel, same bat time. Channel 14 on Tiger TV, by the way. We will see you tomorrow. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.